In this video, I'm going to talk about taxation of long-term care insurance. I work with individuals and business owners across the USA and do long-term care insurance digitally. So I'm going to talk about individuals, and I'm going to talk about business owners of all different types of setups. So the first thing I want to talk about is individuals. For long-term care insurance premiums, first of all, here are the ages. You have to be, these are the deductible amounts on your tax return based upon, what age you are. So if you're under 40, then, you're looking at 420, 41 to 50, 780, 51 to 60, 1,560, 61 to 70, 4,160, and of course, 71 and over is 5,200. So, those are your deductible amounts for being an individual. Now, the thing about being an individual and not having a business is you're probably not really going to ever see this deduction here. That's not where a lot of people won't tell you that. They'll just say, oh, it's tax deductible. But, well, you probably won't benefit from this deduction, just to tell you the truth. The new standard deduction has raised up, and because of that, it makes it harder to itemize. And also, you have to itemize, you have to have a significant amount of medical expenses and, to be higher than 7.5% of your AGI. So if you're an individual, let's just say it's probably unlikely that you're going to get this deduction. Now, if you do have a considerable amount of deductions, we're talking $20,000, $30,000, $40,000 of itemized deductions, then your chances, go up that this is going to benefit you. But you're still going to be subject to the overall 7.5% of AGI rule. So what that means is if all of your medical expenses don't get over over 7.5% of your AGI, then they won't be deductible. So now let's say if your AGI was, 40,000 and, 7.5% of that is, I guess, around $3,500 or so. If you have $5,000 of medical expenses for that year, and you're paying premiums, and all of your deductions are above, $20,000, then you'll see a deduction. But when you're an individual, the chances are probably unlikely that you're ever going to get this deduction. I mean, when you start getting older in your 60s and 70s, if you start your medical bills, if you got some medical bills that start racking up, then you have a much more likelihood of, getting the deduction, but I wouldn't count on it, okay? Now let's talk about the self-employed. So if you have an LLC, partnership, sole proprietor, or S Corp, then you can get this deduction. So basically the way it works is you set it up kind of with your company, and because you set it up and it's being paid to your company kind of as a benefit, then in that instance, you're able to deduct these amounts. So if you're 55 years old and you're kind of setting it up on your company, then you can pay it and you can get that deduction. And as long as you have that sole proprietor, and as long as, if you run that sole proprietor till you're 70, then you'll get the deduction all the way there, and you won't have to worry about the itemized deductions. So that can be, a good thing if you're a business owner. But of course, once you sell the business and move away from the business, then this isn't going to apply anymore. So that's, obviously something to consider. Now, if you're a C Corp, there's good news. Not many C Corps out there, but if you do have a C Corporation, then you can run all of your premiums and have, use it as an employee benefit. And basically you can effectively have the entire premium be a tax deduction. So in that case, this doesn't even matter anymore. If you get one of those lump sum long-term care insurance policies where it's $50,000 or even $250,000, then you can write all that off as a tax deduction on your C Corp, and it'll be a fantastic tax deduction that you'll enjoy having. And then when you get your benefit later on, it's not going to be taxed when you get the benefit. It's it's just one of those loopholes. So So it can be very beneficial if you're a C Corp. It can be beneficial if you're a sole proprietor. And the ugly truth is, if you're an individual, you probably won't see this unless you start getting a lot of medical expenses, or you're paying, for some reason, a huge amount of medical insurance premiums on top of your long-term care. So I hope this video has helped you with your with your taxation of long-term care insurance. And like I said, I do long-term care insurance across the U.S. I've written a book called Long-Term Care Insurance Made Simple by Ben DeFore. You can check that out on Amazon, or you can get it for free if you go to my website and fill out my quote form.